Well, here we go again, another week back in the Forex Market Preview. My name is Jason Stapleton. Thanks so much for being here, and I'm going to run through the markets. I have gone up a time frame. Oftentimes we will do this. I try and hang around that 4-hour time frame to give you guys some stuff that will hopefully complete during the course of the week, so that you guys will have something to look at, and hopefully we'll have some tradable patterns setting up. And I do have at least one here that we're going to look at on the higher time frame, but I have bumped this week to the daily time frame. And the reason for that is you're going to see, and if you've been following every week, you know it was a crazy month in January, and we have had very directional price movement on the interim charts, so the intermediate level charts, the hourlies, the 4 hours, and we have found some trading opportunities, but it's been really hit and miss. We had a couple of wins in the Aussie dollar, and then rolled right back in and had a pound trade this last week that ended up getting busted out on. So, even intra week, we're having some stuff that's very, very back and forth, and so. This is the nature of trading. As I said in earlier weeks, that we've got days and weeks when things are going very, very well, and then when the market moves into directional trend, the pattern formations tend to not hold together as well. And those of us who are pattern traders continue to look for opportunities, ride it out, continue to take the trades, minimize our losses, and then once the market does move from that expansion into that consolidation phase, we're right back into making the kind of money that we expect to make in this business. So let's go ahead and start. I've just got the Aussie dollar here up. And as you can see, if I drop down to the 4-hour chart, you're going to see the two patterns that we actually paid us a dividend. We had a Gartley pattern, paid us a dividend, target 1 and target 2, and then a bat pattern here that paid us target 1. And both of these are an example of really good stop placement, because both of these exceeded X, which we know from our study of pattern formations that once we exceed X, it's technically a broken pattern. But because we chose good stop placement, both of these stops held for both of these. One of them paid for target 2, and the other one for target 1. Both of them ended up being winners. And if you want more information on that, again, it's some of the stuff that we cover each week in the private client group. And I don't, well, it doesn't matter. If you want to know more about it, just send me an email and I'll send you the link to sign up. But that's stuff that we're working on every single week, and the private client group is discussing that in more detail. I got a whole hour to put that thing together, so you get more than just the snippet you get here. Bouncing over here, and my internet's running a little slow, so I apologize, to the pound. Pound is still, we've talked about the pound being directional from all the way back up at around 62s. It went straight south basically to 56s, and then we had a nice little pop back up into resistance. Now, this is what is important to pay attention to. When we look at this, we're looking at this line. And I can't remember whether we discussed this or not last week. I'm sure I would have. We're looking at the support level, which should become resistance. It was support back here as well. And then you're looking to the high side of that as well, right here. Okay? You can see that area, and if I zoom in now, because you've got kind of a low point and a high point here where the market is likely to find its zone, when we're looking for a trend continuation, when we're looking for someplace for the market to come into and potentially present us with a trend continuation zone, that's really what we're looking for. We're saying where is the kind of the low level where the market may come into, and where's the high level? And then we say, well, all right, here is the zone that the market is working in. You can see the market did find some resistance right in here at the level we were watching. Had a nice decline, but rallied all the way back up towards the end of the day and then spiked again. And then we get, if you're looking at counter or trend continuation style opportunities, this is really your key opportunity here, because the market comes back down. We don't close below the previous day's low. We don't close below. It isn't until right here, boom, that we get that close below. And now you can look back and say, hey, the previous day's low was violated. In fact, the last 3 days' lows were violated there. And we get this long black candle, and that's really your signal, or that's a signal. It doesn't have to be your signal, but is a signal that tells you, hey, this market is looking to continue its trend. Now, the reason that we look at this in terms of a trend continuation instead of a counter trend strategy is what's happened over the course of the last several trading days, or trading weeks in this case, is we watch the continued decline happen with nary a pullback. And then when we do see that pullback, what you should be thinking is, hey, this market's probably not done going going south, is in continuing in directional trend, because the underlying psychology of the market is going to say, we've been selling, selling, selling. This could very well be nothing more than a relief rally that says, okay, we've got profit takers who've been short from way back up here at 63s. They finally come down in, and eventually they're just like, hey, there's no more sellers, and buyers start to take a little bit of profit. Then we get this bounce right back up into 58s, 58.70s, and now, guess what? Now all those folks who are looking to hop on the continuation of the trend are looking at this zone to do that. And when you see this confirmation candle, that should give you a really nice indicator that, hey, you're on the right path. And here's the great thing about that. Let's say I do decide to sell here. All right. I'm going to go ahead and take my short position right there. Let me just make this red for ease of movement here, so you guys can see it clearer. Let's say I do decide to sell right here, and I'm going to delete the box because we don't need that anymore. I'm going to sell them right here, the open of the next day's candle, basically. So I'm going to sell them right in here somewhere. Look at where my stops can go. My stops can go right above the previous high here. And this is what's so great about it, is once we've got this in there, stops can go right above those highs. Because if we're correct, if the market does intend to go lower here, we shouldn't violate the highs. It does happen on occasion, but in most cases, if we violate these highs, we were simply wrong about the trend continuation. And in this case, the market did exactly what we would have anticipated it would do. It came into 5800s. We break down again. We go all the way to 5690s, which is over a 100 pip move, virtually no pain. This thing went virtually straight south. You had to sit through a little bit of a pullback the very next day after you would have shorted the market, but then it just collapsed, and you made a very nice profit. And look where we ran right down into. Look left, guys. Structure leaves clues. I'll say it again and again and again to you. Look at where the market runs right down into. I can draw a line on it and see where the market stalled. Boom, right there. Now we're potentially in a counter trend zone here. So now my counter trend traders are looking at this and saying, all right, let's redefine the zone here. And we can see that we're tipping on that zone. We could potentially come into a reversal zone here where the market could have a rally. We're not yet oversold on our RSI, but we definitely want to be watching what happens inside of this potential reversal zone. And if the market does dip down in here, similar to what we saw up here, and the market holds, and then we get one of those reversal candles like we talked about right here, there's going to be an opportunity to potentially take a counter trend position. It could be, and I say could because we don't know at this point, but it could be an end of move, meaning the market came down, we put in a double bottom. We would have, at this point, looking at your RSI at the bottom of your screen, we would have bullish divergence, wouldn't we? Those of you CTS traders, we would have bullish divergence against those lows. And certainly we could see a rally back up into previous highs around 158.70s. Now the other scenario here is that the market continues to go lower. And in that case, what we would look for is, again, if you're holding your short positions, you're probably holding the second half of your position still. You take off your first position here and you're holding the balance to see what happens. And if we do go lower, it's going to give trend followers another opportunity, if we rally back up into the zone, to look to get short. And this is just one of the ways that we teach trend continuation here. My point being, I say all of this to illustrate one simple point. If you stay inside the market's OODA loop, if you are constantly reevaluating and using a what-if scenario, what if the market goes higher? What if the market goes lower? What's my plan? What is my how am I going to take strategic advantage of that? Now you may say to yourself, well, if I'm a counter trend trader and the market goes lower, I simply don't have a trade. If you're a trend continuation trader and you see the market rally out of this potential reversal zone, then you may simply say, well, I don't have a trade. But if you're constantly reevaluating and questioning, well, what is the market going to do next? What if it goes higher? What if it goes lower? Then you are always in a position to take advantage. And you're never in a position to be caught off guard. Because the market will only do one of two things. It will go directional or it will go sideways. We are either in trend or we are in consolidation. Markets go up, they go down, they go sideways. That's it. So by not allowing yourself to be caught off guard, by always asking yourself, what if What if this happens? What if that happens? What's my play? How am I going to take advantage of this? How am I going to exploit this situation? You will find that many times you are apparently the only person who is prepared for a particular move. And when that move happens, you can capitalize in a very big way. Similar to this situation we just saw right here. So, moving right along, let's take a look at Canada. Again, Canada's one we looked at before. We've got a potential really big pattern playing out here on the weekly chart, and that's going to take us, it could be a while before we get on up there. And from what I'm seeing here, let's go back out to it should be on the daily chart. Let me bump out to the daily chart again. It could take us a little while to get up to this 886, but if we do, there's a potential shorting there. And as of right now, just watching that, there's nothing that I'm paying attention to there. The euro, we talked about the euro here. We talked about the potential break above the highs back here. All right? We talked about the break above these highs. And as you can see, whoops, God, if I can get a hold of this thing. No, never mind. These highs right here that I can't seem to move my deal over. We did break above those. Market stalled out right at the resistance level for about a day, and then boom, we broke out. And we talked about buying that breakout, potentially grabbing a hold of that, and long positions. And as you can see, we had 1, 2, 3 straight candles north at the end of that. Now, what's the play from here? Again, 4,200 basically is the next resistance level. There's nothing here. I'd be looking at a play for a reversal. So I'd be looking for the market to a trend continuation play here. There's a couple of levels here that present a nice area for potential reversal. All right, I would basically be looking, and I'm gonna paint a wide zone here because I'm not real sure intraday what's going to happen. But I'd be looking for something in here. Okay. Anything between 3460s and 3245s. Now, if some of you are going to look at that and say, well, yeah, okay, 200 pips or whatever. But, hey, we're on a daily chart. If we were on a 5-minute chart, it might be a 20-pip zone or a 10-pip zone. But the market is overbought. We're sitting at 87s right now. So, market's overextended. We're actually up into, it looks like a 127 extension here. Actually, a little bit higher than that. We came up into the 1618. Man, my eyes are going bad on me. We're up into a 1618 extension. It would not be out of the realm of possibility to see this market come back into a 382 retracement. Now, where would that take us? Well, that's going to take us right into the lower half of our zone here for 382 and a potential trend continuation trade here. So just keep an eye on it and watch what happens. But certainly, all indications here is that this market intends to go higher, and there's no signs that it is it intends to reverse at all, or intends to change direction in terms of overall trend. The yen, forget about it. Just straight north. Boom. If you're a trend continuation trader and you manage to catch that, congratulations, man, because that's just a parabolic move straight north. And we're probably going to run up into 9460s. That's going to be the major, decision maker here. We may not go straight there. We may have a little retracement here and then pop up again. But, man, I would be so surprised if we didn't see 9470s. It just makes too much sense. That's where the structure is. Market hasn't even taken a breath yet. It's just violated everything all the way up. So, looking at New Zealand now, I got nothing. I'm not even going to worry about it. Euro Aussie. Euro Aussie's got a nice potential cipher pattern setting up here. This one may actually complete this week. Right there. So if the market rallies up in here to 133.42s, go ahead and look for potential selling opportunities there, or we would sell on a limit order if it gets there. If you trade those daily charts. Euro pound, again, straight north, just a total vertical movement, does us no good as counter trend traders. As consolidation traders. Euro yen, straight north again. Those yen pairs are just going haywire. We've got a potential pattern setting up here at the 886 and 1618 extension on Euro New Zealand, but we are several days at the very best of getting there. Euro Swissy, I'm not going to mess with it. The Swissy charts have been wrecked. Now 127 extension, another potential cipher pattern here, if my eyes do not deceive me, in terms of this. And let me just go ahead and grab this backwards. Okay. And let me just make sure of this. No, this is not going to be a cipher pattern. Sorry, guys. Yeah, it is. Yep. We did not close above the 618, so we do have a valid pattern. Boom. Boom. Down into the 127. Up into the 786. So, if we get a pop up into... Wait, hang on a minute. This doesn't look right. Yeah, it is. If we get a pop up into 156.84s, look for selling opportunities. Pound Aussie. Pound Canada. Breaking structure, coming down into support. We'll see if it holds. Again, the chart's a mess. I'm not real interested in trading that. Pound Yen. We talked about the consolidation that was happening here. Broke out to the high side. So we would expect, again, trend continuation. We could get a very nice long move up here after this breakout, so we'll watch it. There's lots of room to run here. This market consolidated in here. RSI gave a little ground, and we're currently not oversold, so we could see a very nice move north here. Pound New Zealand, not interested, and Pound Swissy we're not even going to look at because I don't like the Swissies right now. So anyway, all said and done, that's about it for this week. And again, we're going to run back through these again. I hope I gave you a little bit of training value there at the beginning before we ran through the charts. And if this is of interest to you, if you like the idea of patterns and being able to kind of read the market and read a chart and understand how that works, we've got the syndicate, and we also have the private client group as things that you can take advantage of. It's all on the site. I don't need to pitch it to you. But I want to thank you again for coming, and next week I'll be back with more great stuff. Until then, trade empowered, live abundant, and I'll talk to you soon.